Bharat Financial has been out there in the market for almost a year now trying to find a suitor. Well, IndusInd Bank has taken the deal. So I don't think there was anything very surprising in terms of the swap ratios, and Shraddha will come in with the details of what brokerage houses are saying. But the swap ratio is 1,000 shares of Bharat Financial get exchanged for 639 shares of IndusInd. It's probably slightly on the higher side, so good for Bharat Financial shareholders. The deal is structured interestingly, and I'll talk a little bit about IndusInd Bank and what it means for that in a minute. But just to briefly mention the structure. So the assets and the liabilities of Bharat Financial get merged with IndusInd Bank, but the actual distribution network of Bharat Financial sits outside in a wholly owned subsidiary. Smart move because the cost structures of the business correspondent business are entirely different. The ways of running it are entirely different. So the Bharat Financial management will be running that particular business. And as Ramesh Sopti called it, it's a lift and drop so that there's no sort of disruption in the business in the merger process. But to Shraddha first, and then we'll talk about IndusInd Bank. Shraddha, what are people saying about the deal this morning? You probably had a chance to read through the brokerage reports.
Well, yes, just like you said, the deal is finally done after speculation for months, for a year actually. So now Bharat Financial Inclusion shareholders will get about 639 shares of IndusInd Bank for every 1,000 that they held. Now this swap ratio implies a premium of about 11.3%. It values Bharat Financial at 1118. That's a premium of about 11.3% if you compare it to the closing price on Friday. And in fact, it's a higher premium of about 15% if you compare it to Bharat Financial stock price on 11th September, the day when that merger exclusivity was actually announced. However, analysts do say that over the long term, the synergies and benefits that IndusInd Bank will gain out of this will more than compensate for the kind of slightly rich valuations that they have paid for Bharat Financial. Just in brief, and also an additional point, the bank will issue some warrants to the promoters so that they can maintain or bring back their shareholding to 15% post this merger. Broadly, in terms of the synergies, what the management said that it would lead to an immediate reduction in the cost of funds by about 3 or 4%. And secondly, there would be an immediate release of capital because microfinance loans under the structure of a bank, they have a lower risk weightage as a standalone entity or as an NBFC MFI. Broadly, when it comes to brokerages, they say it's a win-win deal for both. The merger will be ROE and margin accretive from day one itself. Antique broking sees a significant scope for margin improvement in Bharat Financial's operations because of two reasons. One, the interest rate spread cap that would have applied to Bharat Financial as a microfinance entity now vanishes, of 10%, as now vanishes under the banking umbrella. And secondly, they will be able to access low cost of borrowings. They see that the microfinance book will continue to grow at about 35% over the next few years as far as the merged entity is concerned. Phillip Capital says that in the longer term, the merger synergies will more than compensate for the rich valuations for the deal, which they believe were paid for the kind of reach that Bharat Financial will offer to IndusInd Bank. NOMURA has maintained a buy with a target price of 1,850 on IndusInd Bank, and they say that the merger will be largely book and EPS neutral as far as the FY19 numbers are concerned. Motilal Oswal also maintains a buy with a target price of 2,000 on IndusInd Bank, even as they say that the merger will be accretive on a margin, ROA and ROE basis by 30, 15 and 80 basis points. And lastly, Edelweiss, they said the deal is an aggressive and determined bet in line with the bank's planning cycle 4 objective, where they intended to double their network and customer base. So broadly, we could see Bharat Financial react a little more positively than IndusInd Bank, at least in the short term, given the kind of premium that they've paid. But again, it's not a very surprising or a big divergent number.
All right, Shraddha, thanks so much. Just flagging off one thing, because some of the conversation at the press conference, everybody kept asking Ramesh Sopti that this is a high volatile business, high volatility business. Why are you getting into it in such a big way? And I think a couple of times he said, look at our book. We have lots of pieces which standalone could be considered volatile, but we have managed them. So I went back to just look at their investor presentation from the last quarter to see what the mix looks like. And he's right. He does have businesses which standalone would be volatile. So if you look at their corporate book, and I'm not sure why, but they use microfinance as part of the corporate book. But they've got gems and jewelry, which is that diamond portfolio that they had bought formerly of the ABN group. That's almost 6%. You've got the lease rental business, which is the second highest at 3%. Real estate is almost at about 3%. And microfinance post this deal will be about 9-odd%. He said high single digits, but in a previous conversation, he told me he'll maintain it between 8 and 9%. On the retail side, commercial vehicles is 13%. Loan against property is 6%. Equipment financing is 4%. So he's absolutely right. The point is not that you should stay away from volatile businesses. It's how you manage these volatile businesses. But therein, of course, lies the management bandwidth. I think Ramesh Sopti has been the one who has taken this bank to this point, and he has a sort of conservative strain of managing these businesses, which he's held on to. The question is that what happens after Ramesh Sopti? That's been the question that everybody has asked for a very long time. Jan 2018 is when his current term ends. He has 2 more years to hit 70, which is the RBI's limit for bank CEOs. It's possible he stays on, but even at that Jan 2018 point, he would have led the bank for a decade. And just to put this out there, 75 crore was the profit in the first financial year that he took over. 2,868 crore was the profit last year.